This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Monday. It is, 4:10, and we just started the week. And pretty much, I would say, some are calling it a pause, some are saying digestion, some are saying stalling. It all depends on how you look at the market. We've come very far, pretty fast, or some would say very fast. So I look at today and I see some constructive action. I don't see you have to be in a rush to be putting excessive risk on, but I see that we didn't fall apart, and this stair-step higher that we've seen in the S&P is still intact. But we are seeing divergences among sectors. So just like all stocks out there that aren't created equal, either are the sectors. So you really got to pick your spots very carefully. You look at the chart of the SPX, you'll see. Basically, you remember this beautiful trade when the market broke down from this wedge type pattern when we lost all the moving averages and closed below 200-day moving average and broke the channel right here. Well, hey, look where we're back. So if you were long the SPX here and you went on a nice vacation for 2 months, you didn't see anything happen, especially if you didn't have a newspaper. But if you were trading, and you didn't see the signals here that you were below moving average, that the advanced decline lines were deteriorating, and you held through this, chances are you might have been stopped out. So anyway, let's just fast forward to where we are now. You had your August lows, you had your retest of the lows, you had to clear this pivot. Some guys said there's no way we're going to rally, and they've been shorting this whole thing up. And there are some guys that say, hey, look, you had a double bottom, you had a red dog reversal and a poor jobs number, and you reclaimed the 8 and 21-day moving average here. So that means try and be long versus just having short in the brain. And from there, we cleared this spot right here, which was the old resistance that we failed on. You remember that little topping tail that created this W pattern versus just a V. And then we pushed up, retested, didn't fall apart again, made a new high, or tested the 8-day, and look at this, we've been above the 8-day the entire time, but look how far extended we are from that 8-day, so makes you think that we have to wait a little bit for it to catch up, at least. Now we're also above the 200-day, and we have a gap from Friday, so you have a few things. As long as we stay above 258, okay, which was Friday's low, bears can't talk too loud. And then with a little bit more time, let the 8-day catch up, and then maybe we'll have some tight setups to figure out whether or not we can continue to go to the upside. And to be honest, if we were to pull in to here, people think I like to be a bull trader only, et cetera, et cetera. That's not the case. I'd much rather see maybe a pullback to here, and then we'll see some stronger, pattern / bases. But as of right now, an inside day today, and we're right back here. So a little digestion in front of that would make a heck of a lot of sense. So this morning I talked about some things that probably need to happen in order to keep the rally intact for maybe more traction down the road. And at this point, none of that's taken place yet, so no reason to be, off your seat trying to be, long. You look at the XLE. Some people might have gone short, and I did not, but if you were looking for a reason to potentially short the XLE and you've been jumping out of your skin saying this is a broken sector and this was just a reflex rally, well, it just closed below this support. So now this closed below 67. So if you were trailing this from this igniting bar down here with that double bottom, double bottom, boom, 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 this was your out. And if you were looking for a rollover, because some say that this is just one really big H pattern, right? What's the H pattern, you ask, Red Dog? The H pattern is, here's your pole, then you have a rally back up into resistance, and then you roll down. So some people might say, okay, I want to short some strength because I have a feeling it's coming back and I don't want to be shorting down here where some doomsday guys think we're going to be breaking 60 and going to 40 because oil's going to 20. Nobody knows anything, but what you do know right here, this upper channel is in jeopardy unless it gets reclaimed very fast. So this is a signal to get out and maybe get a little short if you were looking for a reason to be short. So now, the reason that's the case is because of the strong dollar, and you have oil just trickling down or leaking. Hey, is that a pun? Like leaking oil? Anyway, you know, what shouldn't happen here, which we pointed out, was a bit of a breakout failure. Okay, remember this channel that we talked about, you know, before this? Broke above this. This was a decent spot. Oil made it to 50, looked like it was going to go over, and then you had a doji. Broke below this prior high, giving you somewhat of a breakout failure, showing you no momentum. And since then, you know, went basically back into the lower half of this channel, couldn't really bounce, and now it's below this 1420-ish area that I talked about, and you know, it's below the moving averages and doesn't look compelling, and the lower it goes, the higher the volatility, you know, we might see. So this is something saying that be careful in perhaps the spiders or the overall market after a huge move that we've seen, that you need it to be a lot broader to continue. And right here on the spiders, this is your, you know, gap support, which was 206.30. We held above it, but the 8 days all the way down here, and that's what this market's been riding ever since this gap and go that never got filled, on top of this red dog reversal that ignited when the jobs report disappointed and everyone bought it. So anyway, here's your new spot. I'd be a bit careful up here because we are extended and you don't have the exact dynamics of, you know, continuing so fast. The Russell probably has to play catch up if the market's going to broaden out, and at this time it didn't really break down, okay, but it didn't have the power to go through it. So if you're waiting for it to go through it, waiting for confirmation, wait. If you're in it, saying I'm going to be in tier 1 while it's in this channel or in the upper end of this overall channel, then you're still in tier 1 and you're waiting. If it starts to break below this, you get out, or if some guys are waiting till there. But overall, you know, this could be an inverted head and shoulders pattern to help give fuel to the bulls if it were to take this out. But as of right now, it has not done that yet. It's still got a boatload of resistance above it. So if we're going to be at new highs this year, which I'm not saying we are, it's going to need some help from the Russell. XLE's got to stop going down, and the bios, you know, need to continue to not be in the danger zone. So today the bios pushed it a little bit above this spot, couldn't really hold it, but it's still in the upper end of this spot, not in the danger zone. To me, the danger zone's down here. And there was a decent trade. I know I bought the IBBs when they were red, got played around a little bit, and then I sold into the 320. And if we went to here, I would have been upset, but instead we're right back here, and I'm not even that compelled to have it on. It's not as tight as I would like it to be. You did see some decent action. Let's see how they close. CELG, pretty strong, you know, as a leader above the moving averages now. Let's see if it can stay above it. So that's positive on the bio front. Let's see what GILD did. GILD also, you know, had a pretty wide range bar. I guess it hasn't really broken the downtrend, but a decent wide range. Oops, sorry, hold on. Wide range bar. Right, it kind of broke it a little bit. Now it's hovering above it. So the longer it stays above this, you know, the more constructive it could be for the bios. Then I heard some people talking about JUNO. What JUNO do? Still hanging around. This pattern looks actually kind of tight, and bios that are tight, sometimes when they get volume and expand, they're tradable. So this, as of now, you know, looks as if it's, you know, acting better than other bios, I guess you could say that. What's KITE doing? KITE, little topping tail today, but right back near the old highs. This, you know, was probably more of the pattern here that as a trader, you know, you were looking for a breakout above, but it's still sloppy. Look at all these tails, and you know, this little topping tail might have got some people out, maybe even got some people short, and I guess you see if this, you know, kind of trend holds here. But KITE is something you need to know a lot about and have a what's it called, a thesis with, because it's one of those stocks that can crush you fast. So, or it could reward you too, but I'm just saying it's, you know, it's a high beta bio. As far as, you know, I talked about in my focus in my note, I wanted to see how, you know, the go-to stocks that reported earnings last week, if, you know, the opening print was the high print, and do we fall apart and fill the gap, or do we hold in there and start to rebuild? And, you know, Google showed some early morning strength, and what's it called, held the gap. So we'll see what the case is there. If you remember here on this earnings, it looked like it was going to get going and kind of failed. So right now this is your first day above the gap. We'll see how much longer that continues for and see what kind of channel we get here to see if it's tradable. Still a big open gap is good, for the bullish investors as we let the 8-day catch up. Amazon also, nice close, okay, held the gap, didn't give you a red dog reversal like I wanted to, but it's now forming a little bit of a channel. Maybe it's letting the 8 and the 21-day catch up. So with a little bit more time, maybe there's a trade above there. Some might be long today versus low. So far in the game, providing leadership. Last time, you had the big gap up on earnings, came in, and then it really was a choppy mess in the bottom third of it until, breaking lower. This already is almost in the 50% mark, so it's showing you that it's a little bit more constructive versus what happened here when you gapped up and failed and never took back a third. So it showed you the potency of this bar where this isn't that potent. So we'll see, maybe this goes a little bit more sideways, and at some point it could be buyable above 620, because I do think Amazon is going to have an unbelievable holiday season. Facebook continued higher. This too has been one of our go-to stocks. Lots of different entries, red dog reversal right here, or when it broke the descending channel right there. Into here is when I bought the calls, because I figured if Google was good, it could have a pop just like it did the last time, and it did. So I'm still in the calls, but I had the stock overnight and I sold it just because I feel like it's extended from the 8-day. I'll stick with some options. If we get closer to 105 tomorrow, maybe I'll get out of the options because earnings aren't until, next week, not this week. But at this point, it's been a great trade for those sticking with it. And then you had Apple. Last week I talked about 112.10, tight pattern igniting, talked about it going to 117, 118, and it went further than that. And if you had a little left over, which I did, you had to be real quick. For some reason, it felt heavy pre-market. I knew for myself I wasn't going to be into earnings because I've been talking about how I don't think the iPhone number is going to be great, and I'm not an economist or an analyst. I just don't know one person that has gone from, the 6 to the 6S. I knew everyone and then their mother going into the 6, and now I don't know anyone. Maybe I heard one person. So if there's no way the numbers are going to be better. It's just how will they be compared to the lowered numbers. So that could create some emotion. And anyway, I had a very quick stop. The VTF saw me get out around 117.5. And if you didn't get out then, maybe you got out when it went below the prior low, which was right here, which was 116.33. And it didn't end so bad. If you look at it really in perspective, this was we talk about the day count rule. Day 1 is when you get in. Day 2, sometimes you add. This could have been considered your day 2 as it held, in this upper end of the range. You sell day 3, hold some just in case there's more. That's why I figured maybe there'd be more. And then now this potent day could have got you out, especially if you're not going to be taking it into the earnings report. So at this point, I don't really know exactly. I know that it's been a weaker stock pretty much all year. Some are still pointing to this macro head and shoulders pattern with the left shoulder, the head, and they think this is a right shoulder being built, and then at some point we're going to get a big move lower. I don't know. We'll see what happens at this point. The jury's out. All I know is that last week, for cash flow, even if you just took this day into that day, it was a decent trade. So now we'll see, what we have tomorrow and where we are, and I'll go over a bigger strategy there. So there was also some action in some of the bean down names that were names in my note I talked about if Netflix could clear this tight little pivot. I tried it earlier and it didn't work, so I didn't stay with it, and then I had to leave for my Bloomberg sector segment. Some who went back to it later had a little bit more, results, or had a better time than I did here, because my buy price was 101.56, and it didn't happen first thing in the morning. It happened later, and now we'll see if it can get into this gap. Just a nice day and a half trade that held support for some of you. Not everything's going to be a blockbuster trade, but if you target something for a strategic tactical strategy, that's what your Netflix was. And now we'll see if it can get above this 104.88. Tesla was broken also. Broken name. Guys, a lot of guys short it. When has it been broken from? It's been broken since, breaking this upper flag on this outside day right here. Boom. Then it never regrouped, and from down here, I guess wasn't ready to go lower yet. We saw the same similar pattern here where some guys caught a cute little trade above this pivot, but you had to be a surgeon. So now maybe this time there's another one, to another lower high. So if you're in it because of the relative strength today, maybe there's something that, I think there was some kind of news that they had their best sales quarter in China, even with the supposedly China weakness. That's why I was up today. So we'll see, if we could ever get back above this 21-day, which has been a wall or a ceiling of resistance coming in. Boom, failed, boom, failed, boom. Let's see if there's another failure here. But there's still a little room for a day trade to there if you want to take that kind of risk. What did the metals do today? The metals, not a heck of a lot. Still hanging in there. I don't know if the metals haven't given you that many reasons to trust them yet. So we'll see what happens tomorrow. It's still holding above the 21-day after a feisty move from these lower levels. Not the best action considering it broke above the 200-day, came back below, and there's really no interest, and the 8 days now curling down. So you have to be a gold bug in order to really still be in there versus just a trade. I was thinking that maybe with the type of move that we had, it could see this upper resistance, but it never really made it even to this one. But it did, I guess, shake some guys around right here when it went back above this prior support that didn't serve as resistance. But now it's in kind of no man's land, and it's not really set up, so just take a little care. And that's really it. Microsoft is not too soft. Call it micro strong, I guess. MSFT had a little follow through today, showing. Ooh, that's not it. Microsoft, what's the matter with me? Okay, there it is. Another follow through type day. It opened up on Friday. I actually tried to short this instead of shorting Google and Amazon for a tactical trade. Those went down and this didn't. I guess that's telling you how strong it is. Here was your, resistance that it gapped above. This was when it reclaimed the 200-day, showing that some institutions were getting back in. And now all of a sudden, I guess let's go to the monthly chart and see. Let's go to the weekly chart and see where it is. Look at that, Microsoft, micro tough, I guess. So anyway. Again, what happens when things get above their moving averages? They come back to being in the game. And this got back above all the moving averages around 45, and now it's 54. What do you do when things are above the 8 and 21 day? You try and be long them, not short them. Just a rule that I think you guys should write down. And that's really it. Today was a type of day where you did get some digestion. There was some spots to make some money. Okay, as far as, I guess the Google and Amazon, even and Facebook, I think it was flattish. Twitter also perked up. We'll talk about that tomorrow. Apple, you had to get out fast, which thank goodness I did, and lost some money, but it could have been a lot worse. Tesla, Netflix gave you a day one. The question is there a day two? If you took them, okay. Bios, a little bit of strength, but no power. Russell, hanging in there, but needs time. So, these are just some thoughts that I'm thinking about as I try and tactically move throughout the market and create some cash flow and situate myself to ride the market and change or change with the market if it does change, because it's been the flexible traders who got out of the way during the hard break in August and maybe got back involved, when things ignited versus, buying and catching a falling knife, or shorting and saying things can't go higher, because both ways will probably put you out of business. With a tactical strategic approach planned, you could perhaps have a little bit more longevity. Anyway, have a good night. Talk to you tomorrow. Be good.